Hello, this is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors, and coming to you today with our Markets with Megan. We've seen the earnings season kick off this week. This morning we got some of the big banks that kicked off, which typically is how we start our earnings season. The estimates for S&P 500 earnings for this quarter are for them to decline at the fastest pace we've seen since the pandemic. The headlines you're going to see today are that the financials, which came out this morning, were better than expected. And yes, that is the case. We had some decent earnings from the financials, but what we want to do is delve into what are those financial companies telling us about the health of the consumer. And one of the companies, specifically Citigroup, made several comments about the increase that we're seeing in credit card debt and the usage from consumers, and then specifically the amount of money they're having to absorb for an increase in delinquencies for these credit cards. So this is while you're going to read that the reports were good from an earnings perspective, yes, interest rates are higher, so banks are making more money off of what we call net interest margins, where they can pay lower rates and then lend out and get higher rates in return. But we're looking at the underlying trends that we're seeing from what banks are telling us about the economy and the consumer. So consumer still is in a very difficult situation with the high inflation. So we're going to continue to watch this. We'll get a bunch more earnings in the next couple of weeks where we can get a better gauge of what's going on with the economy. But at this point, the earnings season has started off pretty strong, and that's a positive, and we've seen that in the equity markets today. That's all I have. If you have any questions or comments, please feel free to reach out to podcast@verdence.com.